2026, when crypto enters the credit system. I'm here with Andrei Poliakov, CEO and founder of APX Lending, a crypto lender based in Canada and approved by the Canadian regulators. Andrei, good to have you.
Thanks for having me, Philip.
So let's start off by, asking the obvious, like regulation. How do you get approved to be a crypto lender? Why does this make you different compared to other lenders?
Yes, I mean, look, to answer that question, you have to sort of take a bit of a step back and shed some light on my history and in this space.
Please.
And sort of what I've been sort of spearheading here in Canada. So in 2017, I launched a company called Coinberry, which became one of the largest regulated crypto trading platforms in Canada. We ran that company for about 5 years, ended up selling it to a publicly traded company, but really what set us apart was the fact that we approached the regulators very early on with this vision of, you got to think back, almost 10 years, 2017, with this vision of how do you operate a regulated crypto business? And, that particular business was a trading business, but nevertheless, the question remained. And, we engaged with the Ontario Securities Commission and through them, the Canadian Securities Administrators, which is like the Canadian version of the SEC in the US. And so we engaged with them very early on and said, okay, look, we have this business model. We want to, give people an opportunity to acquire Bitcoin in a safe, secure, and compliant manner. How do we do that? And worked with the regulators for a couple of years. I think it was 2-3 years. It took us to go through that process. And then we became the first actually, regulated crypto trading platform. And so you think about, okay, so we have crypto, right? The first step is how do you get people to get into crypto? How do you get people to buy Bitcoin? Because without that, you can't have, you can't have a credit system, you can't have a lending business, you can't have any of those sort of auxiliary second step sort of businesses. So the first problem that, I try to solve is how do you get people into the space in a safe, simple, and secure manner? The second step, though, is once people have that crypto, once that people have that Bitcoin, how do you give them the liquidity, the freedom to actually use that Bitcoin without potentially selling it, without giving it up? Again, in a safe and secure and compliant manner. And when I'm building these businesses, what I think about is mass adoption. In my point of view, mass adoption will not take place until and unless we have regulated and safe and secure businesses that the masses, not the sort of the leading, people that are on the sort of the fringe, the edge of technology, but 90% of the population that just wants to use crypto without even understanding how it works, and inevitably will end up doing that. The same way that we currently, use email without understanding how it works in the back end for the most part. So in order to get the technology to that point where it's that simple to use and that transparent, and to give people the comfort to start using these services, you really do need to go and work with the regulators hand in hand. So I don't share that, the opinion of some people that all regulation is bad and all regulators are trying to stifle innovation. I don't think that's the case. I think as an industry, we need to work with regulators to find a balance so that we have, innovation that's allowed to seed and grow and sometimes pushes the envelope. But at the other hand, you need to have on the other end of the scale, you need that sort of the prudent approach and, investor and borrower protection. And so for us, long-winded response, but for us, when we launched Apex, it was very important to work with the regulators to build a business that addressed the sort of the realities and the concerns that existed post Celsius and post BlockFi, and address them not only at a business sort of at the business level, but also addressed it from the perspective of a regulatory framework. And so we worked with the regulators in Canada again, it took about 1.5 years to put together a framework of how a regulated crypto-backed business could operate. What are some of the protections? What are some of the stipulations? What can and cannot be done with the collateral? Where is it custodied? And I think we did a fairly good job, and we operate a business which is extremely risk averse. And the latest sort of movements in market, we fared extremely well, as did most of our borrowers. So we're very happy about that. And again, all of the policies and procedures and insurances and all of that goes into building and operating a regulated business or a regulatory approved business. Really, you see the value of all of that during times of market movement and volatility and tribulation. So
yeah. So, Andre, help me understand when people say crypto credit, I think securitized, just you know, margining your Bitcoin or whatever that is, right? Speculation, margined, et cetera, et cetera. How is this different with Apex?
Yeah, so a lot of our users actually borrow from us for things completely separate from, trading on leverage.
Okay.
We have farmers that borrow that, ended up mining Bitcoin early in the day and are now looking to buy more farmland. We have people borrowing to invest in real estate, to invest in other businesses, to diversify their holdings. So
Okay.
if you have Bitcoin,
Mhm.
right, you and you believe in sort of the appreciating value of Bitcoin with time, you think that it's going to grow with time, then it would be wise of you to not sell that Bitcoin, and then you're faced with this sort of dilemma of, okay, well, I can sit on it and just wait for it to appreciate. That's one thing I can do. Or through a company, work with a company like Apex,
Mhm.
what you can do is actually borrow against that Bitcoin. So that happens all the time with securities. I mean,
Oh
you can
yeah.
borrow against your securities, against your shares with your local broker. There's some criteria about the type of shares and amounts and all those things. But fundamentally, people do this all the time, especially wealthy people. They hardly ever sell their equity and their shares. They borrow against it. And so if you look at, how do wealthy people build their wealth and their generational wealth, well, borrowing against their assets is one of those ways. And so what we allow to do with Apex is we allow people to build that generational wealth by not giving up, not selling that Bitcoin while getting liquidity out of it. So how do you do that? Let's say, for example, you have $100,000 worth of Bitcoin. Well, with a company like Apex, you can actually borrow up to $60,000 against that Bitcoin. Now, that Bitcoin is custodied with a qualified insured custodian, a licensed custodian, and that's the security against your loan. You can take that loan, you can use it for various things. Like I said, we have clients that use it to buy land, to buy real estate, to invest in other projects. Some clients use it to buy more crypto, but that's by far not the most common sort of use of funds that we see on platform.
So let's play this out a little bit. So if someone had $100,000 in Bitcoin and they borrowed $60,000 of it, what would those payments be? Would they be making like a monthly payment back to the account, or how would that work?
Yeah, so there's different ways, and we're very flexible in the product that we brought to market. So I'll give you a little bit more sort of color on the
Yeah,
product. So we
that's
allow
fine.
our borrowers to borrow anywhere from 20 to 60% loan to value at
Mhm,
origination. So in my example, if you have $100,000 worth of Bitcoin, you can choose to borrow anywhere from 20,000 all the way up to 60,000,
mhm,
and that depends on your basically on your own risk appetite, because the Bitcoin, the collateral will go up or down in value.
mhm.
And if it goes up in value, that's wonderful. You can borrow more. You can pull more funds from your loan, just like you would with a line of credit. If the collateral value drops, if the Bitcoin drops in value, though, eventually we will. And basically, what ends up happening is as the value of the collateral drops, the loan to value ratio starts increasing.
Increasing, all right?
So let's say you have a $50,000 loan on $100,000 worth of collateral. That's a 50% loan to value, right?
Mhm.
50 over 100.
Right.
If that 100,000 now starts dropping, let's say it drops to 80, well, now you have a $50,000 loan over $80,000 worth of collateral. So your loan to value is increasing. If your loan to value reaches 80%, we're very unique in that we will start notifying you that your loan to value is increasing, and you might want to top up, send more collateral, pay back some of your loan, do something, but you don't have to. And we're very, very unique in doing that because almost all of our competitors, when a margin, this is called a margin call, when a margin call happens, they usually give you 24 hours or 48 hours to do something. We just notify you.
Mhm.
So you don't actually have to do anything, which is really, really convenient. And what ends up happening, if the value of your collateral increases thereafter, amazing, great. If it continues to decrease and the loan to value reaches 90%,
Mhm.
so in my example, you have a $50,000 loan, the collateral will have to basically drop to around $55,000. So from 100,000 all the way down to 55,000. So almost a twofold decrease in Bitcoin price. At that point in time, then we start actually liquidating that collateral to pay back your loan, because that collateral is the only security that we have. So there's no credit checks. There's nothing else that we take as security. It's just that Bitcoin. So we do have to liquidate it eventually to pay back your loan.
Yeah.
To answer your question about interest payments, which I realized I didn't, but to go back to that,
We'll get there. We'll circle back to it.
yeah. So with the interest payments, we offer a variety of different types of loans. We offer interest only loans, so you can take out a loan anywhere from 3 months to 5 years in length. It's completely up to you as the borrower, and you pay only interest payments for the duration of that loan, and at the end of the loan, you pay back the principal amount. You can also choose to get amortized loans, so where you have equal payments of principal and interest for the duration of the loan. So at the very end of the loan, you basically, there's no bulk payment of principal, it's all paid out. We're also rolling out balloon payments as well soon, which means that you don't actually have to, the interest is accrued and accumulates and is only payable at the end of the loan. So there's actually no interest payments throughout the loan term, and then you have your principal and interest payment as one bulk payment at the end of the loan. So a very varied product. We allow our users to and our borrowers to sort of pick and choose what they want with different LTVs, different lengths of loan, different types of loan interest payments. There's a lot of flexibility that we offer, but what's key really for borrowers to understand when they sort of shop around is, again, that fact that we have a very, very high liquidation LTV at 90%. We're the only player on the market that I'm aware of right now that offers such a high liquidation LTV. And really what that means to you as the borrower is you can afford to have Bitcoin drop a lot more without having to do anything versus the competition, right?
Yeah.
So, in our case, Bitcoin's around, 100,000 right now, Canadian. So in US, it would be around 60, 68, I suppose, 68 US. So, fundamentally speaking, if you have a higher liquidation LTV, that Bitcoin can drop even further before you have to do anything.
Absolutely.
Which is very convenient.
So let me unpack a couple of things. First of all, the interest rate, then I'll circle back to Bitcoin. Apples and apples comparison. Let's just say with APX versus someone non-crypto based lending. What would the interest rate be at a 50% LTV over 5 years? What would your interest rate be, and what would the interest rate be for a typical security? Do you know that comparison?
I can tell you that the asset class itself is starting to be sort of taken more seriously with rates coming down. With us specifically as of right now, and again, we're working continuously on bringing those rates.
Yeah.
Our rates are as low as 9.99%.
Okay.
On our loans, so very competitive. So we are getting out of that range where borrowing against Bitcoin would net you basically unsecuritized rates, credit card rates. We're getting out of that, and we're getting more into securitized, sort of like the range of securitized rates, which is really good.
That's amazing. I'm actually shocked at that. I thought you were going to say 18, right? I didn't think you were going to say 9. Is that similar to lending on a normal security at 50%?
So that, it depends on the security type, right? It depends, right?
Yeah.
So, but I think, once you get into even high single digits, you get into a very competitive landscape. There was a time where Bitcoin backed loans would be issued at 14, 15%. I remember that. And the whole industry has matured quite a bit.
So, it helps when you got the President of the United States going all in on it. Obviously, it's moved the industry a lot, I would imagine, huh?
It has. And it's interesting. So we have, just to give you a bit more color, we have two verticals to our business. One is our own lending business that we operate using our own technology that we built out. But then our technology is so good that we have other lenders globally that use it to, issue their own loans. So we have clients in Europe, we have clients in Australia, in the US that use our technology in the back end. And so we have our white label vertical that we offer to other lenders,
good for you,
to banks, to credit unions. And I can tell you the discussions we're currently having with banks and credit unions that are looking to offer crypto-backed lending, not only in North America, but abroad as well, are very, very encouraging. And it's day and night versus, like I said, we rewind 10 years ago when I was starting in this industry.
I can imagine.
It's come around so much. And I am very excited, actually, truthfully, I'm very excited to have big financial institutions that have access to, the hundreds of millions of retail clients, for them to start rolling out, whether it's trading products or lending products. But really, again, I'm all about that mass adoption. And so for us, even if we, offer our technology to a bank, which is then going to be able to offer, crypto-backed loans to their clients and undercut us on pricing, that's great. That's great because, I mean, if we can get utility of crypto and that, the ability to utilize Bitcoin as an asset class to borrow against into the hands of hundreds of millions of people, I think that's the real win. And so I'm less sort of focused or sensitive about, what's the rate today versus like what can we do big picture wise to really get this, get this product into the hands of hundreds of millions of people in the US and Canada and globally.
That would be a
That
huge market share.
fundamentally,
Huge market share.
exactly
Huge.
that
So,
exactly.
so Andrei, help me understand. So in the past month, Bitcoin's down 25, 26, 27%, right? And that's the big rub when it comes to crypto lending, I would imagine, the volatility, right? I mean, it moves fast. And a lot of people who are involved in this, they have a high risk tolerance, right? Like they don't mind the swings compared to some other people, right? You,
Yeah.
you agree with me? So the concern would be that the people that have this high risk tolerance would leverage more and pour more into it. So when the call comes or they get the notification at 60 or at 70 saying, hey, you may want to add more to it, they don't have that to add, right? And then it ends up selling, et cetera, et cetera. Where do you go with that? What is your
Yeah,
experience?
I mean, look, I think just judging by what happened in the last, 2 weeks, obviously there were some, automated liquidations that brought, the price down. I think there's some leverage, like leverage derivative trading that brought the whole thing down to where it is now. That being said, I'll be honest with you. I mean, I've seen Bitcoin go from, $600 to, what was it, 10,000 down to 3,000, up to 60, down to 16, up to 80, down to whatever, to the 50, down, up to 125 now, or, I think 120, 120, 125 down to, the current, whatever, 70. So if you look at the actual volatility of Bitcoin, notwithstanding the last 2 weeks, it's actually been subsiding and coming down quite a bit. There are a ton of stocks out there that are order of magnitude more volatile, and I'm talking about like blue chip stocks that are more volatile than what Bitcoin was until again, notwithstanding the last 2 weeks. So I think the sort of the narrative that Bitcoin is this extremely volatile asset class is used to be more pertinent back in the day. I think we're starting to calm down. Even now, if you look at, okay, so we dropped 15-20%. I mean, that's not if you take out a 60% loan, you'd be at 80% now.
Mm-hmm.
So it's not like we're not talking about Bitcoin dropping 50% overnight anymore. Like that just doesn't happen anymore. And so to answer your question, yes, some borrowers on our platform did get liquidated. Yes, that's a fact.
Do you have a number on that? Like what percentage how often when you say, or in the last month, because it's just so timely, how often do you say, okay, we had to send a call or a notification to add more to it? What percentage of time do you have to liquidate? I don't know if you're allowed to,
Oh,
if you feel
yeah, I
comfortable.
mean, but I can tell you that the vast majority of borrowers top up.
They do.
The vast majority,
So when
yeah,
you
yeah.
say
Like,
vast majority, 60%,
like I
70%?
would say 80%.
Okay.
80% of borrowers that were in that margin territory, so between 80 and 90%, I would say about 80% of them topped up.
Mhm.
About 20% didn't and
Mhm.
got liquidated, and that's just the ones that hit the 80%. Like
Yeah,
a lot of
that's
them just
reasonable.
didn't hit 80%.
Yeah.
Yeah, so for the most part, people have, it's not like people borrow against, they have, let's say they have $50,000 worth of Bitcoin or 100,000, and that's all they have, and they borrow against
Yeah,
absolutely
right.
all that they have.
Right.
Usually people, are sitting on, let's say you're sitting on even that same 100, 200, you borrow maybe 20, $30,000. So you have a lot of, buffer room. And we see that. So, and we give our borrowers the option of, either topping up with more collateral or paying back some of their loan as well. So we've had that happen as well. A lot of people would say, I'm sitting on some cash right now. Let me pay back some of my loan, bring my
Yeah.
LTV into like solid territory. but yeah, so I think the asset class in on itself is becoming more, more stable, and is starting. Even, we work with private funds that provide the liquidity that we lend out, right? So we're not a DeFi protocol. We are centralized, compliant platform, and so we work with multiple, liquidity partners, that funds that provide us capital. Even in discussions with these funds, and these are big funds, even discussions with them, the understanding that Bitcoin is no more sort of a fringe asset class and is now a serious class that you can actually collateralize and lend against it's just where we are right now. That's the reality, which is very positive. It's a very positive, sort of direction that we've been
big
trending.
direction for your for your type of industry. When did that shift happen? Did that shift really happen when Trump got elected and he's like, I'm a pro Bitcoin president? Did you see it galvanize around that, or was it before that?
I mean, for us, it was two things. So we got our regulatory approval right around when he got elected. So, I think April 1st, and so it was, for us, the timing worked really well. So for us, having that stamp of approval from the regulators, again, I mean, it's like our version of the SEC in the US. So imagine you had the SEC.
Big deal.
Exactly. Like approve a lender.
Yeah.
That's massive. So for us, that kind of finalized a lot of discussions that were ongoing. I think, of course, with the Trump, family in general being extremely supportive of the industry, and the changes that took place, with the leadership of the SEC and the statements that came out, that inevitably ended up pushing the industry forward massively, which I'm very happy about, because Bitcoin is just the application of blockchain as a technology to the financial markets. Like you can apply blockchain to, supply chain, like you can apply it to different industries. So my belief, my true belief is that this particular use case for blockchain is truly, to give people the freedom to own and control their own financial instruments without being dependent on, third parties, is, I don't think people really understand. Until you have your bank account closed by the government, you really don't appreciate
the bank account,
the value of financial freedom. Like you can't. You can hypothesize, but you can't. And so, a lot of the reason that, and I've been at a number of conferences where Eric Trump was talking. He keeps talking about how the Trump family had their bank accounts closed during the previous administration, and how that sort of formulated their opinion and understanding of what crypto really is. I mean, I've lived through similar, at a much smaller scale, but there's similar experiences with the banks, and it really it rings true. I mean, unless and until you experience the freedom versus the lack thereof from a financial perspective, you really don't, you really can't appreciate what Bitcoin really is. And so for me, we are sort of on this journey, and it's a movement that isn't going to stop with any one administration. There's some administrations that may be more positive in certain countries, some that are less or supportive. But the train has left the station. Like, we are on this train all together now, and it's just a matter of, do we, how do we see this financial future? Do we see it as a number of rogue players and rug pulls and all those things, or do we go about building utility and services that really bring value to humanity? And again, my belief is we do that by building safe, secure, compliant businesses that really give people the financial freedom that they currently have with all of the other financial instruments that exist, with stocks and shares and everything, and houses you can borrow against. I mean, if you think about it, you borrow against your house all the time, right? In the form of a mortgage. As a lender, the cost of repossessing a house, like all of those things, is phenomenal. That gets priced into your mortgage. With Bitcoin, this is an asset class that you can liquidate 24/7, where the cost of liquidation is basically, the cost itself is zero. I mean, to the lender.
And let me tell you, to get a first trust deed on a mortgage, to get a lender, to get a loan, you got to jump through a lot of hoops.
Exactly.
I mean, a lot of hoops. Credit scoring, asset verification, income verification. I mean, there's a cadre of hurdles you're jumping through. And okay, the loans aren't that much cheaper. I mean, right now,
And again, why do
6.5%.
they
I mean,
exactly? And why do they do all that? Is to prevent themselves from being in a scenario where they have to liquidate the collateral, the house, because it's an expensive and lengthy process. So how do they do that? They mitigate that by looking at your income, looking at your payment history, and saying, okay, notwithstanding the fact that there's already a house that's backing this, this mortgage, what other indicators can we look at to give us comfort that we're really not going to be in a scenario to actually go out and repossess and sell this house, right? I mean, that's what it's for.
Hmm.
When you're borrowing against Bitcoin, you don't need any of those indicators because the asset class itself is tradable 24/7 at fully liquid markets. And so for us, like our technology, we mark to market our entire loan book every 30 seconds.
Mhm.
So every 30 seconds, we get a price point on our entire loan book. And so, I mean, that gives us, we're talking about volatility. I mean, like that gives us basically real time, pricing.
Yeah.
So, yeah.
So Andrei, the 9.9%, just going back to that straight for a second, this is for everybody, regardless of where they live, their credit score, their zip code, their net worth, nothing. It's a flat rate, or does it shift? And if it does shift, what are the qualifications for around that?
Sure. So we offer loans in Canada and the US as a lender. So Canada coast to coast, both retail institutional lenders, and then the US to institutional lenders. The 9.9% is for loan sizes of $1 million and above. If it's a loan size of less than $1 million, it goes up slightly. Currently, we offer loans between $25,000 and $100,000 are at 1149, and then between $100,000 and $1 million, it's 1099, and then $1 million and above is 999. Again, I mean, we are constantly working on improving those, but those are still very, very competitive rates. We have, as I mentioned, as a lender, we operate in North America. We have partner companies that use our technology that operate in other jurisdictions globally, in Europe and Australia, and so as a lender, the rates that I'm talking about, that's for North America only, and then again, we have companies.
Okay, and is that regardless of credit score, net worth, anything, or is that's
regardless
pure of security?
we don't look at the credit score. We don't look at your credit score, and we don't getting a loan from us doesn't impact your credit score because we don't report it. Yeah, it's a fully securitized loan against the Bitcoin, and that is it. And we're happy to service. We're happy to service anybody that has a legal use case for it.
Andrei, another question: what does this look like in 10 years? Like,
That's a great question. In 10
what does
years,
this look like? Yeah, what does this look like?
yeah.
Or 5 years? Take your pick. But where does this look like? What does your company look like? What does crypto lending look like? What does crypto look like down the road?
Yeah, I mean, look, I'm truly excited about sort of what the promise of DeFi and how that plays into everything. And so DeFi is basically, instead of borrowing through a centralized entity like ours, you borrow. It's basically peer to peer, but on a global scale. One thing that we're missing, DeFi is missing right now that is preventing it from being utilized at scale is a compliance layer. There's no financial institution, there's no bank that's gonna utilize DeFi because there's no compliance layer. And at the end of the day, you do want some sort of know your client, anti-money laundering, anti-terrorism financing, protections in the services that you're offering and the clients that you're working with. Like personally, if I'm able to get 2% from an individual direct, that's great. But if that individual got that money through terrorism financing, it's okay. Personally, I don't want to do that, right?
Mhm.
So you want those, you want and need that compliance layer that's currently missing from the DeFi space. So for me, in 5-10 years, we're operating in a place where people don't even need to know or don't even care to know the technological specificities of how they're getting their, for example, credit on their crypto, where people are able to, whether through an online platform or their favorite financial institution or bank, are able to plug into a global DeFi network that already has that AML, anti-money laundering compliant layer in it, so that that you're not in participating in this network, that you're not financing
Oh,
anybody evil. And so that's not going to happen in 5 years, but I think in 10 years that would be something that I think would be very exciting for us. And from our perspective, our vantage point as a company, we want to bring those compliant products that have phenomenal rates and plug into global liquidity to clients and, again, in a safe, compliant, and secure manner. Easier said than done.
That would be, wow, that would be disruptive.
Yeah.
Like, that would be disruptive. Just cutting out the lender. Cutting out this middleman, because it go peer to peer, whatever if someone wants to give you a rate at X, they give it. But it would work with crypto as opposed to real estate, because it's always accessible, easily sold.
Yeah. There's also, there's a lot of discussions that we're currently having with, real estate developers as well, that are looking for, a lot of clients that have, talking about use case of loans, a lot of clients that have crypto that want to diversify, real estate developers that want funds. How do you marry the two? We come in the middle, take the crypto, provide the funds. There's an infinite amount of use cases for a loan. To me, the most important concept is, how do you allow people to, again, create that or keep that generational wealth through the accumulation of Bitcoin versus the sale of Bitcoin?
Yeah. Yeah, that's the key to you brought that up early, and that's the key takeaway or one of the key takeaways on this video. One last question, Andrei. What do you worry about? Like, what keeps you up at night? Like, if this happened, would not be good.
Yeah. That's an interesting question. Quantum computing, there's some interesting articles that are coming out about, the resilience of the protocol against quantum computing, and the wallet addresses that have to be updated. So that, I think, is that's a problem that's kind of existential. It needs to be resolved, and is being resolved. So that's one really important thing. I think for me, we work very closely with regulators. So I have like one foot in the, in the regulatory legacy financial system, which moves extremely slowly. Like, it's painfully slow. And then my other foot's in the crypto world, which moves at lightning speed with innovation and teams that are just like creating phenomenal, financial products and instruments. And it is painful to be able to see how quickly and efficiently and effectively things can be done. And then on the other hand, trying to convince or work with systems and people that just, it's like trying to convince a tortoise to run as quick as a rabbit. It's not made to do that. And you're unfortunately stuck in the middle trying to marry the two. And so that's, for somebody like me that, it's an entrepreneur in this space, and I like scale compliant businesses. It's hard. It's frustrating sometimes, but again, it is part
the fact
of
that you can do it is extraordinary. Like, that's a unique ability, right?
Yeah.
So
it's,
Andrei, what happens if Bitcoin hits 25,000?
Nothing really happens. If you look at it'll Bitcoin has a cyclical cycle that we've been seeing for the past 15 years now. And again, I've seen Bitcoin retreat and go up and retreat and go up, and eventually, it's very easy for me to say because I built like a massive thick skin around this. But again, once you've seen that like go up and down, you stop paying like attention. So I think nothing will happen at 25. I think it will rebound because there's a phenomenal amount of buyers that would like to buy Bitcoin at 25. If you had said 2,500, I'd probably have a hard time believing that.
Yeah. Right.
But 25, 30, would I like to see it there? No, but I don't think it's not gonna. Nobody's gonna nothing's gonna happen to the overarching sort of thesis if Bitcoin drops down to like the 30s.
Yeah, it's still this cutting edge, new type of platform that you're lending in, which is very unique. These interest rates are a lot lower than I ever imagined you were going to say, frankly.
All right.
Andrei, appreciate your time being on the call.
Thanks so much for having me.
You've been watching the 720 Credit Score YouTube channel. If you want to rebuild your credit the right way, visit 720creditscore.com. Please like this video and subscribe for more great content.